Welcome to the 2021 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this weekend edition, June 19th, Juneteenth, 2021. Well, the euphoria of buying and selling continues in both the housing market, the credit market, and everything is free flowing, but signs of cracks are beginning to show in the economy. Both personal consumption and commercial consumption is beginning to slow down as we enter this first weekend of summer 2021. Please be sure to subscribe if you haven't already, and I thank you for your support. And we're going to get right into it, ladies and gentlemen. Mortgage rates shoot higher after Fed Reserve Chairman Powell's comments. The average rate, 30-year fixed mortgage, moved higher, hitting 3.25%, according to Mortgage News Daily. Last fall, mortgage rates dropped to a low of 2.75%. And now we have the 30-year fixed-year mortgage going up. No surprise there, as inflation goes up as well. Wages remain stagnant. Jobs, losing jobs every week. We just lost 412,000 jobs this past Thursday. And so my question is, who is buying houses? Either single-family homes, townhomes, condominiums, multifamily, mixed-use properties. Now, the good news is, there is some good news, ladies and gentlemen. The good news is, for those new home buyers, millennial home buyers, the FHA and others have calculated a new way to make student loans less of a burden for those millennials and Generation Y will be future Generation Y home buyers. And they're going to calculate it less than 10% of a burden. It used to be 1% calculated, debt of your debt to income ratio. So that should help alleviate some of the burdens experienced by millennials and younger generations trying to buy their first property, either a condo, townhome, a single family home, etc. So that's the good news. They're trying to make it easier for us to get into the market. The bad news is that mortgage rates are going up and inflation is going to be going up in the short term, at least for this year and the next year. After 2022, that's when the deflationary pressures will be felt. A mega deflation as all the bubbles begin to pop after the midterms, of course. And someone commented in that last video about the variants and everything about with this sickness, this health sickness, and how they got the Delta variant, and now we're going to go on and on. They're going to run through all the letters of the Greek alphabet with this variants and this whole thing. And so it's going to go on and on and on to the midterm elections and beyond in 2022. So we want you to be prepared for that. But this 30-year fixed mortgage is going up. It's a sign that things are not moving in the right direction. And the Federal Reserve Bank is going to have to come in and buy more and more things to make up for the deficit that's experienced in this economy. Like I said, this past Friday, the Dow Jones was down over 533 points, as you can see up here. And now grocery stores are excited to charge you higher prices. Really, this was Article Friday in CNN Business. Now, as you know, you're already paying higher prices at the pump, higher prices for meat and vegetables, but your grocery store is thrilled. Rising prices of staples like milk and pork, affect grocery stores too, as they have to pay more to their suppliers and vendors. But while they are raising prices under the guise of increasing supplier costs, they're adding a little extra on top of that. Stores mark up the full rate of inflation plus a little bit more, said Burke Fillinger, the managing director of retail consultancy strategic resource group. For example, if the price of meat that a store pays to its suppliers goes up to 6 cents a pound, the store might raise the price it charges for that same meat by 10 cents. Might be a good idea to become a vegetarian if they're going to keep raising prices this high for meat, or a vegan. I know the vegan lovers in my camp would love that as well. But the thing is that not only in groceries, the price of suppliers, remember now, the distribution centers, the food that we get has to come to the distribution center. And these distribution centers, the truckers come and they get it from the distribution center and distribute it out like a spoken wheel process, a just-in-time delivery system to these stores. But what happens when the distribution centers decide to no longer send out the amount of food and supplies that they're sending out to these stores, whether it be a Publix in the South or a Kroger's or a Harris Teeter up north or any of these stores, Ralph's, what would happen, or Martin's, what would happen if they decide to not send out more supplies? Well, that's going to be the great thing about this inflation thing that's going to hurt many people, is that the supplies of food is going to be going down, but the prices are going to be going up. And this is due to several factors. Climate change, the crops are not yielding. Even the farmers that do have crops, and they do have water to irrigate their crops, irrespective of the drought, they just don't have enough, enough the crops are not yielding the same. The soil is not yielding the same amount of food it once was, and so that's going to be a big problem because the supply chain issues will continue through 2022, ladies and gentlemen. Look, pork prices rose 3.2%. Seafood and fish prices rose 1.9%. Milk prices rose 4.6%. Some people say that powdered milk, evaporated milk and powdered milk is better anyway for you than some of that 2% and stuff like the regular milk. So I don't know. I'm not much of a huge dairy person, and they said oat milk is good too, so you might want to, and I heard the stock in oat milk was going up, so you might want to look at that too. Oat milk, I heard it was good. What do you think about that? But fruits and vegetables price of fruits and vegetables grew 2.9%, including a 9% jump for citrus fruits. Are you seeing oranges, mandarins, peaches? Have you noticed those prices? Lemons, limes, have you noticed those prices are going up? Albertsons already said that they're going to be benefiting from rising prices. So is Kroger. And so, hey, that's fine. They have to make money too. They have to survive because in most urban environments, the grocery stores are where we go to get our food, from Whole Foods to Trader Joe's down to Albertsons, Kroger's, Piggly Wiggly, IGA, you name it. And so they're going to pass those costs on to the consumer. And here is the greatest thing that we have to look out for, and this is what we're all preparing for, is that you see the coming Greater Depression of the 2020s. Now, this article implies that the next depression is going to last for a decade, which I agree with. We're already at the beginning stages of this, and it's only going to get worse, as you know. And even if even if it doesn't get worse, they're going to shut down the economy on purpose because they want to slow down. This is part of globalization, to get everybody on the same level playing field, economically, socially, politically, spiritually, and it's part of the end time process. And so this is 10 trends that will make a decade of despair for the global economy. Listen, we have a lot thing that's going on here. We have debts and defaults, as I talked about before. We have $28.5 trillion in debt and growing. A second factor, the demographic time bomb in advanced economies. Health systems are taxed with aging populations from the baby boomers on down. And Social Security is going broke. Unfunded healthcare liabilities, retirement liabilities unfunded, deflation, the growing risk, as I told you before, deflationary crisis is going to begin later in the middle innings of this economic collapse. So right now things look inflationary, but once we get past 2022, all bets are off and we're going back to deflation, and that's what the Federal Reserve Bank does not want, but unfortunately they're going to get because they inflated all of these asset bubbles to beyond levels sustainable. Currency debasement, once again, the dollar. Russia leaving the dollar, other countries, China leaving the dollar, the Middle East will be soon to leave the dollar, and that's going to break the oil hegemony and dollar hegemony that the U.S. has. And the fifth issue was digital disruption of the economy. Everybody's working from home. They don't need no big downtown skyscrapers anymore. And deglobalization. Everybody is going to be going to every country for themselves now, since they're all in debt, with the United States leading the way with the most debt. So all of this is going to reinforce the facts that we're going to be heading toward a depression. We're already in a depression, as you know, but it's going to be even more amplified as all these systems begin to break down. And one thing that concerns me the most is it's not so much the economic concern, but it's about the personal freedoms of Americans being taken away, something that we're not used to, that's going to happen during this next second and third lockdown waves, either planned or unplanned due to this health crisis and due to other factors, due to violence increasing. There's been shootings. Have you noticed that? There's been shootings in every city, from D.C. to Baltimore to New York to Phoenix, Arizona, Denver, Colorado, all places, all over. There's been an increase in shootings, carjackings in Chicago, in broad daylight. So there was a shooting at a construction site. 40 bullets were fired in D.C. They were talking about in the news. Unbelievable, guys. Listen, people are going to be getting more tense. And I wouldn't be surprised after 2025 if there's another world war conflict, maybe a Cold War, or maybe something like that. Who knows? Maybe between Iran or maybe between U.S. and some other nation. But just as we're pulling out of Afghanistan, that could be another backbreaker to this whole a black swan event that's coming up too. But I'm betting right now on the grid going down, or something hacking going on with this cyber stuff they've been talking about with the last meeting that they had in Switzerland, the G7 meeting. I'm betting on that to happen first, and then we're going to go into everything else. But ladies and gentlemen, the best thing to do is to continue to prepare, to continue to buy physical assets, and because paper money is only going to get us so far. But the good news about paper money is, if at least you have cash on hand, you own that cash. If you hold it, you own it. If you don't hold it, you don't own it. If it's in the bank somewhere, if it's in a digital account, high yield savings or whatever, and you can't access it when the power goes out or when something goes on. Then it's just as well, dead as anything. It's like having a gun without brass or anything. So guys, that's the key thing here. So because some people are going to believe that, yeah, cash may be worthless in some parts of the world, but in a lot of parts of the world, people are still going to believe it has value, and you can use it to barter and trade and to get goods and services. So continue, my friends, to prepare. Don't get caught up in the euphoria or buying things that you don't need for people that don't like you anyway, or trying to impress somebody. We're not in, as preppers and as for preparation, where regardless of where we're at in the country, we're not into impressing people, but we're into utility. That means skills and things to build communities and help our neighbors, help our family to grow and to stay alive during these dangerous times that we're in here in the Western Hemisphere in America. Be blessed, my friends. I'll continue to keep you updated. Thank you for your support. Have a great weekend, and I'll talk to you very soon.